poverty and unemployment are rampant throughout the world right now, and this is particularly evident in Europe, where the unemployment rates are significantly higher than they were prior to the recession that seems to never end. And I would suggest to you that despite what the central bankers are saying, despite what the governments are saying, this is being done intentionally to increase this poverty so that the general public will have to give in to the governments and basically erode their sovereignty. You came here for the truth, so let me unveil that for you. The first thing I want to get to is this. Oil prices tumble on the Saudi discount move. This information is out of the AP, saying oil prices slumped to a multi-year low after Saudi Arabia cut the price of oil it sold to the US. Now, there are just 2 points I want to make on this specifically. Number one is that they are saying that this is partly responsible because of the shale boom that is happening in the US. Now, there's a lot of different sides to that, whether or not that is actually a viable solution for the future, and that's a different story. I just want to mention that one thing. And number two is this. Now, this is just another thing I want to talk about. I'm not necessarily saying that this is the reason why, but isn't it quite interesting that they're putting the squeeze by bringing the price down globally, because of course the US controls this all, is that they are putting the squeeze on certain countries, and one being Iran and another being Russia, and also the AP mentions Venezuela as well. But essentially, what I want to mention is that, look, they're putting the squeeze on these countries right now because they're essentially their biggest export, or one of their biggest exports, is now worth less. So, of course, they're making a lot less income in a very short period of time. And this could be another way to put sanctions on these countries. It's working regardless of whether that is being done intentionally. It will certainly hurt them into the future. But ultimately, I see this being put into a way where they are aligned with each other and they form their own alliances away from the West. That's certainly happening. And this is out of Fox, basically saying that gas is now cheaper than milk. This is something that doesn't really happen too often. The site is so surprising that Americans are sharing photos of it along with their Halloween costumes. The gas sign with a $2 something a gallon. And they also said the first time in 4 years that gas has been cheaper than $3 a gallon. Now that's big news, and this is obviously what you would think this would improve the economy. That's what they're suggesting that will happen. Of course, that will not happen. The price of oil can come down dramatically, and this will not, specifically will not, increase anything in the real economy, because of course the price doesn't really affect the real economy. It should, but no longer does that have any effect on it. It is all based on what the central bankers do. I got into that in my other videos previously. I won't mention it today. But speaking of central banks, let's take a look at this right out of the ECB's website. Why has the ECB introduced a negative interest rate? Now, for those who don't know, this is exactly what just happened recently. The ECB actually imposed a negative interest rate so that the banks would have to lend because their money would be, more and more negative as time went on. So one of the problems was that these banks who are being given this free money were just letting it sit there, and that's going to be a problem because it's not necessarily being lent out to the public. So even though there was no need to lend it to the public because the public doesn't have enough money to take out a loan, or doesn't have enough resources or desire to take out these loans to buy these big ticket items, then they're going to basically force these banks to do something else with that money. And we know that that money is going to be not necessarily handed out to individuals, but it will be put into gambling schemes. That's what's going to happen by using this negative interest rate. But really they don't care, because that's the whole point of these central banks, is to take risk, to push the limits, push the envelope, and it is working quite well for them. You could read the article for yourself, but essentially they say how they're going to fix everything by imposing these negative interest rates. They are going to fix everything, and this is quite hilarious. First the QE would fix everything, and now the interest rates, negative interest rates, are going to fix everything. It's quite humorous if it wasn't so painful. This right here out of Wolf Street, talking about the wrath of Draghi. First German bank hit savers with the negative interest rates. First of all, they said that the negative interest rates imposed from the central bank to the banks, commercial banks, would not follow and trickle down onto the average investor, but of course it has. Now this is just one bank doing this, possibly a mistake on their part for imposing it, because this would definitely cause an exodus out of their bank. We'll see what happens. However, this is taking place as of November 1st, so we'll have to keep an eye on this specifically, and let's see what they said. Retail and business customers with over €500 on deposit as of November 1st will earn a, quote, negative interest rate of 0.25%. In the less euphemistic terms, they have to pay 0.25 per annum to the bank for the privilege of handing the bank their hard-earned money or their business cash. That's pretty obvious. We saw this coming in advance, because we know that if the central bank is going to have to charge the commercial banks are just going to put that on to their customers. It's no different than Obamacare being put onto all these companies. The companies are going to pass that down as a tax onto the individual, the customer. So they said they wouldn't do it, but of course they would. Just one more example. This right here is out of the Financial Post. The ECB has lowered its interest rates to an unprecedented level, to the point where it actually costs money for private banks to deposit money with them. And then they mention how this is quite interesting about the Canadian GIC investors are getting basically 0%, and they're saying, hey, look, you thought you had it tough. But even Denmark and Sweden experimented with this negative interest rates, but the ECB is the first major central bank to do so. And I see this as a global issue that's going to happen, where we're going to have to go into negative territory, and technically we already are when you factor in inflation, but even in this nominal terms, they're going to have to go negative, because they want to strip people of their wealth. And this is one great way that they can do that. They use inflation, they can use deflation, they can use a hyperinflation, they use the bail-ins, negative interest rates. They have many different ways of doing this, and they're going for every single one of them, because this way it's much faster. Instead of going with just a few percent per year, this way they can actually scoop and scrape off a lot of the wealth of the citizens. In my book, I said this: the system works well and enables the banks to make incredible profits for their customers, who earn basically next to nothing for keeping their money in the bank. The party is over when the majority of the people start asking for their money back and the fraud is exposed. This fraud is known as fractional reserve banking. So we give our money to these banks in order to keep it safe for us. And what do? They begin charging a negative interest rate. They begin charging us fees, monthly fees, to, if you want to transact a certain amount per month, and so on and so forth. They are charging us, but we are giving them the money. Then they use that money in their fractional reserve banking schemes to multiply that. Then they take that multiplication of that money and use them in these complicated derivatives, and that is going to the extreme level. Even in Canada, where the GDP is less than $2 trillion, we have individual banks having trillions upon trillions of dollars in their derivatives books. And of course, that will never get mentioned on the mainstream media. You know that, I know that, but that's the reality. We have a system that cannot ever be bailed out. Right here, we're talking from the Business Insider, talking about the German bond market. You can see that arrow pretty clear there. It said the yield on Germany's 2-year bond actually went negative, touching just below 0%. In other words, investors are effectively paying the German government to hold their money. They're not the first one to do this. In this category here, we saw this happening all around basically going negative, because the amount that the money is actually worth is declining. Money is, or cash money or digital money, its actual wealth is declining year over year, and this is beginning to show up even nominally, not just in real terms when factoring in inflation. This is a huge deal when you look at it, because all of these people around you are having their money, their pension funds, their retirement accounts are all invested in a system that's going down, is falling downward. We're watching these countries as they go into the negative interest rates, as they impose the bail-ins. We see the framework for the bail-ins being taken place. We see inflation increasing in certain countries. We see deflation going on in other countries. It's a big problem wherever you look, wherever you turn. So the fact remains is, why do you still have your money in this system? That's the question I have for you today. And of course, if you found this video informative, please give me a thumbs up, and don't forget to become an insider. The Insiders is where I give out all my best intel for free. That is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.